did think it was interesting that when the chair was asked about financial conditions related to the stock market, he said that asset prices are elevated by many metrics right now. Now, he was, and I think he made the point pretty clearly that he was zeroed in on parts of tech and the AI related stuff, but maybe not overall. So I understand what you're saying. Last time you were on with me, you said, quote, 2 cuts are on the maximum side for 2025. Given the fact that you believe today was, maybe putting in Sharpie, if you will, that they're on hold for the foreseeable future, 2 cuts, does that still make sense to you for the balance of 2025?
I would say exactly what I said in December, and that is maximum 2 cuts this year. And when I mean maximum, I'm not predicting 2 cuts. I just think that's the most you can possibly think about. And at the present moment, if you had made me pick a number, I would say now 1 cut would be the base case, and maximum 2, though, still.
Isn't that pretty good? I mean, wouldn't that be a good thing if the Fed doesn't have to cut as much as it might have thought initially, and that investors have come to grips with that fact? As Chair Powell said, as I told you what he said about, where the economy is and the labor market, he thinks they're in pretty good balance right now.
Yeah, well, the unemployment rate went up for consecutive months, several months. It went up, and now it ticked down. And I think in the most recent reading, and I think he's taking a lot of solace from that movement. He was worried about the labor market weakening, and so the Fed's goals were in something of a tension. I mean, the CPI, or the year-over-year inflation rate, which he referenced today, that you use year-over-year. I thought that was important. He mentioned that it takes out some of the noise of seasonality. But it's a departure from where we were 18 months ago when we were talking about annualizing short-term inflation numbers. So he's looking more at year-over-year inflation. I do think that the unemployment rate being at 4.1 and having relaxed a little bit, I think that unless the unemployment rate starts going up, there's going to be it's going to be a slow process to get to a hurdle to cut rates again. And as I said just a few minutes ago, I don't think that you're going to see a cut at the next Fed meeting. So when the Fed says we're in a good place, he means the policy he believes, or he chooses to believe, that it's going to lead to the unemployment rate staying at a comfortable level, a relatively low level, and the inflation rate, he's hoping that it comes down. I don't really understand. They mention owner's equivalent rent or the shelter component, and yes, that should come down. I don't know how much Southern California is going to factor into that because there's obviously not going to be home price declines for new construction or for rentals and so forth in Southern California. But I think it is good that the Fed's on hold, and it's because you need the Fed to be on hold or being easing to support the valuation levels that we have.
Steve Leisman's come out of the room. Jeffrey, bear with me for a moment as I bring him into our conversation as well. Well, you tried, number one, to get him to react to President Trump, as I thought you might. But let's move to...
There's a time, Scott, when you've got to fall on your sword. I just did that for the entire press crew.
What do you make of the market's initial reaction, Steve, to what was thought to be a smidge more hawkish by the chair and the statement, which I think you acknowledged immediately thereafter? Now, the market is coming back a little bit as well. Do we have it right?
I'm so glad you asked that, Scott, because I have a pet peeve I want to get off my chest here, which is this. Why does the Fed do something in the statement that needs to be later clarified in the press conference, okay? What exactly happened, what you're talking about, Scott, if you look at the 2-year shot up because what happened is they took out that statement that we'd made progress on inflation. Powell then comes to the dais and he says, that's not really a big deal. We're just cleaning up the language. Market rallied again on that. Yields fell. You could even look at the stock market. It was spooked by that and then came back. Of course, there was also the added positivity or positive comments that happened on the employment front as well. I think Jeff and you have zeroed in on a really important question, and it was important for Powell to say that we are meaningfully restrictive, and let's listen to what he said there.
I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
So that's kind of the answer to the question there, which is why do they stand pat? Because they've already cut 100, has to work its way through the system. And then I do believe, as Jeff suggested, he took March directly off the table. You look at the probabilities right now, we're at just 22%. That's fallen. You can see we're below 50% on May. And then there's the two cuts that look to be priced in, a June and a December one. But it's not like there is overwhelming conviction on really either of those, especially that second cut in December. So, and that gets Scott to what you know already, which is all of this uncertainty about fiscal policy. He basically said, we're on hold till we know what the heck's going on here.